What if I told you that you could get an investment loan on a property without using W-2s, without using tax returns or any source of personal income, but it's not a DSCR loan? Now, this is exactly what I did for a seller finance deal that we purchased in the state of Michigan. And in this video, I'm going to talk about how we negotiated the terms, structured the payments, and closed on a high cash flow income producing property to add to our portfolio. All right, so first of all, what is seller financing? Seller financing, or it could also be called owner financing, is where the owner of the property that sells to you, they become the bank. So instead of making a traditional mortgage payment like you might normally would do on an investment property purchase, you're just making payments directly to the former owner because they're the bank. Now you might be asking, why on earth would a seller do that? And there's a few reasons why. One of them is they prefer to not have a lump sum cash payment paid to them at closing. This could be a tax issue. They might want that income to come in over a long period of time to reduce their tax exposure. Another reason is they just might not need all the cash at once. They can also earn passive income through interest. And lastly, sometimes they just want to flat out just be done with the property and move on. So let me show you how this played out in real life with an actual deal example. But first, I'm Jeremy. I'm a certified mortgage advisor and creative finance investor. And I help other real estate investors, home buyers, and entrepreneurs learn about creating wealth through real estate by using smarter loans like DSCR loans, the BRRRR method with fix and flip, and bridge loans with long-term financing, and creative finance strategies like subject to and seller finance, among many others. I remove the fluff so you can scale your portfolio, preserve your cash and capital, and build long-term wealth through real estate. All right, so here's what the deal looked like. The sales price initially was $275,000, and we agreed to terms at $250,000. That's the total purchase price for this property. Now, it needed some cosmetic work. Functionally, it was okay. There was only a couple things we needed to address that we were aware of. And really, it was a spectacular deal for us when we reviewed the numbers because the cash flow was so strong given the use of the property and the amount of income coming in. Now, the seller did own it free and clear. So we had an open lane to negotiate based on the fact that they owned it free and clear. There wasn't an existing mortgage that needed to be paid off at closing. That's a really strong position to be in, really, for both seller and buyer. So I offered $250,000, but here were the terms. So the down payment was 10%. So in a $250,000 purchase, we were willing to put down $25,000 at closing, plus closing costs. So the loan amount ended up being $225,000. The interest rate we negotiated, and this was a couple years ago when interest rates were pretty close to the highest that they've been, we negotiated a seller finance interest rate of 7%. And more importantly, the term that we negotiated was 25.5 years. So 25.5 year term on $225,000 for a loan amount at 7% interest. Now the balloon payment, balloon is essentially, I also consider a balloon a ticking time bomb in some cases. So the balloon, where we have to pay off the entire balance that we owe the seller, is due within 5 years of closing on that property. So the entire amount, $225,000, minus whatever we've gradually paid down on the principal, was due 5 years from the closing date. So the monthly payment ended up being somewhere in the neighborhood of $1,565 a month, give or take. $1,570 a month is the payment that we make directly to the seller on that property. Now, the rental amount that we're generating on that property is about $4,250 as of today. It was closer to $3,900 when we closed on the property. So pretty strong difference between what we owe, $1,570 a month, and what was coming in, which was close to $3,900 a month when it was fully tenanted. So the property cash flows beautifully. We can make payments directly to the seller. We were able to negotiate a pretty decent interest rate, really for both sides. It honestly was a little bit more favorable to the seller, but that's okay because the numbers still worked on our end and we knew we could refinance at any point in time within that 5 years. And on top of that, the seller was thrilled to have a passive income stream coming in at 7%. So here's why this deal worked for both sides. Number one, flexibility. Number two, speed. We were able to get this deal done pretty quick. And number three was leverage. A couple other things that were pros here. There was no appraisal required. We both agreed that the price was pretty close to what it was worth, roughly. And we were happy with that, and so was the seller. Number two, we had no bank underwriting, so it gave us a little bit more of that flexibility. Number three, we picked the rate. We picked the amortization term and we picked the balloon expiration date. And lastly, while there was agent commissions on one end because we were working with an agent, it still reduced the cost for both sides dramatically. We didn't have a lot of the typical lender fees that you would see as the buyer in my case, and the seller didn't have a whole lot of fees as well. Now it's key to understand, now this is all about what the seller needs and wants, and they were hitting those boxes. And also the buyer on our end, we were hitting our needs and wants to the degree that we're able to make both sides work. It was all about speed, ease of the transaction. There was a lot of extra fluff fees and costs and timelines that were not needed. And more importantly for the seller, it was about passive income. So a few of the other things to consider here that we would not need in this transaction. We did not need to pull a credit report. So I did not need to have my credit pulled as you would with a typical institution that's going to lend funds for you. We did not have any income verification. All they wanted to see is, do you have the down payment and closing costs on hand, which we did. We're happy to supply that. There was no appraisal required. It could be an option to do that if you're a buyer and you're not certain about the price. You could put an appraisal clause in that agreement, but we did not have one. We both agreed that the price was pretty close to the value. The terms were all negotiable, 100% negotiable from top to bottom. And the timeline was a little over 14 days from the time that we had all title work, all insurance work done. We had the inspection process done. That's a factor here. You always want an inspection, whether you're working with a lender or not. You still want to do your own due diligence. So that was an important fact for us. We needed to keep that inspection timeline in place. And lastly, again, the closing costs, super low, no banks involved. So we were able to save a lot of money on that. The biggest advantage overall is control. I think that's a great takeaway. So we were able to control the terms to the degree that we were willing. And if the seller wouldn't have agreed to those terms, you could always have a conversation back and forth to see what would be a good fit and what would work for both sides. But we maintained control. We got the terms that we wanted. The seller got the terms that they wanted. So really at the end of the day, it was a win-win scenario for all sides, even the agents. So a few tips, if you're gonna look to structure a seller finance deal in the future, here's some things you need to know. One thing that's important is find out if the seller owns that property free and clear. There could always be a mortgage on there, and the mortgage can always be paid off, but you wanna make sure that if you're gonna enter a deal negotiating seller finance, free and clear properties are far away the best situation to walk into from a negotiation standpoint. You have a lot more flexibility on negotiation. One thing that we did is we always focused on what the seller needed and what the seller wants. I think if you focus on the needs first and try to support as many of their wants as you can, a lot of times those things kind of jive, so that makes it a little bit easier, but keep that first and foremost in your negotiations. You want to make sure you put yourself in the seller's shoes. So you want to be clear and you want to be confident. You want to be able to walk through these terms, not just with the seller. You want to walk through those terms with any private lenders you're working with. You want to be able to walk through the terms with your agent so they understand where you're negotiating from. And you also want to make sure you can clearly lay out the plan for your spouse. That is a big factor. Making sure that anyone on your team, anyone supporting you, understands completely what's going on. And that was a big feature on this deal as well. You can always keep the paperwork clean by using an escrow company. We always use escrow companies and attorneys where applicable. We never do deals without one. And if you're ready to close fast and you're ready to pull the trigger, having funds available and knowing how to underwrite your deals is a skill that it can't be overstated. You always want to make sure you're doing multiple reps with these sorts of deals as examples, as scenarios, as homework, right? As proof of concept. So you continue to roll through your numbers over and over again with multiple different deal structures so that when the right deal pops up, you know what it looks like. You know what terms you're going to need. You know what resources you're going to tap into to make sure that somebody's checking your work. That's something I value as well from my network is I'll roll through deals and just say, hey, what do you think about this? Can you put your eyes on this and tell me if I'm missing anything? That's also incredibly valuable. And don't forget too, seller finance deals work great for single family homes, 1 to 4 units and even up from there, 8 units, 10 units, commercial deals, multifamily. A lot of seller financing goes on in the spaces where you have multiple different residential units or you have a lot of commercial use. Keep upping your skills on your seller finance game. Now I share this deal example because there's a lot of seller financing opportunities out there in the market. So this specific investor, a little bit older, and he was ready to exit some of his properties. This happened to be the first one that he got rid of, and we just happened to be there at the right time and at the right place to go ahead and open those negotiations and figure out if a seller financing deal would work for both sides. I would definitely recommend bringing up seller financing as an option if you're currently negotiating deals or if you're looking to negotiate deals in the future. And if the buyer asks, if you're the buyer and you go ahead and ask the seller about seller financing, have a little bit of a structure behind what that would look like. Make sure that that would be a good fit, because if the seller's interested and they start going down that path with you, you want to make sure you have your ducks in a row. You want to make sure you're able to speak to it effectively and communicate what terms would work best. You just have to know how to explain the value here. Now, if you're looking for ways to execute on creative financing, and specifically a seller finance strategy, if you're looking to preserve cash, or if you're looking to buy more real estate without bank approval, seller financing is a spectacular way to go about that. If you want help structuring your first seller finance deal, or your 5th, or your 10th, or your 191st, definitely reach out, let me know. I'd love to talk through your deal scenario with you. It's one of the things I enjoy most. So go ahead and book a call or message me. Let's talk about your deal. Hey, thanks so much for watching. I really appreciate you tuning in and subscribing. Please drop a comment below if you have a seller finance deal, or if you've closed one and you had some interesting terms. I'd love to hear about those. Please like the video. Please check out some of my other videos that I have on the channel that describe a lot more creative financing strategies, in addition to some of the normal institutional lending that we offer through Method Mortgage. And I look forward to talking to you more about building wealth through real estate. Thanks so much for tuning in. See you in the next one.